Greetings, listeners of the StockExplorers podcast, and welcome to our latest deep dive.
Great to be here.
Today, we're turning our attention to C3.ai. They're a pretty interesting company in the, enterprise AI software space.
Definitely relevant for potential investors looking at AI plays.
Exactly. So our goal today is, to break down their business in a way that's easy to grasp, hitting the key points you, as a potential investor, should probably know. We'll use examples to make it clearer.
Yeah, we want to give you a solid understanding of what C3.ai actually does. We'll look at revenue growth, their products, definitely the competition.
Wow, and that comparison everyone asks about. Palantir. We'll touch on whether C3.ai could potentially see that kind of growth.
A lot to cover.
Okay, let's jump right in then. Revenue growth. I've seen reports suggesting a narrative of accelerating growth. What's the latest picture?
That's right. There's been talk of 7 consecutive quarters of acceleration reported, at least as of Q2 FY25 numbers. Recent quarterly figures show year-over-year growth, sort of bouncing between 20% and, say, 29%.
Okay, 29%. And the bigger picture, like the last full fiscal year.
Yeah, for fiscal year 24, their total revenue landed at $310.6 million.
And how did that compare?
That was a 16% increase compared to the year before. So decent growth there.
16%, okay. And what are they guiding for now, looking ahead?
They've actually raised their guidance for fiscal year 25. They're projecting somewhere between $383.9 million and $393.9 million in revenue.
Which translates to?
Roughly 25% year-over-year growth if they hit the midpoint. So that acceleration seems baked into their forecast.
And I think I saw something about diversifying away from a major client, Baker Hughes.
Yes, that's a really important point. Their revenue, excluding Baker Hughes, has been growing much faster. It was up 43% year-over-year in Q3 of fiscal 25.
Wow, 43%. That's significant. Shows they're actively working on not being too reliant on one big contract, right?
Exactly. It signals diversification, which is generally seen as a positive sign for reducing risk. Definitely something investors watch.
Good point. Okay, so growth picture seems, cautiously optimistic with that diversification angle. Let's switch gears to what they actually sell, the products. Seems like there are 2 main pillars.
That's the structure, yes. You have the C3.ai platform, and then you have C3.ai applications.
Let's start with the platform. What is that, fundamentally?
Think of the platform as the foundation, the toolkit.
Yeah.
It's an end-to-end environment. Basically, everything a company needs to develop, deploy, and then run their own AI applications.
So it's like the workbench and the power tools for building AI.
Pretty much. It provides the infrastructure and the services needed.
And they talk about a model-driven architecture and a type system. Sounds complex. What's the benefit there?
The core idea behind the model-driven architecture, or MDA, is abstraction. It essentially separates the logic of the AI app from how the underlying tech, like databases or cloud services.
Okay, so developers don't get bogged down in the plumbing.
Exactly. And the C3.ai type system provides these reusable digital blueprints for common data types and app components. The claim is that together, these allow for much faster development. They've even said up to 26 times faster and better interoperability.
26 times faster is a bold claim, so quicker time to value, essentially.
That's the pitch. Easier to build, easier to adapt, easier to connect different pieces. Imagine standardized Lego bricks for building complex AI models.
Got it. That makes the platform concept clearer. Now, the second pillar, C3.ai applications. What are these?
These are different. They're pre-built, off-the-shelf software solutions, SaaS, specifically designed for particular industries and functions using AI.
So ready-made AI tools, how many do they have?
The numbers vary a bit in the reporting. Sometimes it's cited as over 40, sometimes over 130. Either way, it's a substantial portfolio.
And are these popular? Do customers buy these more than the platform?
Apparently, yes. These applications reportedly drove the vast majority, something like 88% of their bookings in fiscal year 24.
88%. So most customers prefer a ready solution rather than building their own on the platform.
It certainly seems that way based on bookings. They address specific pain points. Think AI for predictive maintenance, or optimizing supply chains, managing energy use, improving CRM, even ESG tracking.
Okay, so practical, industry-specific AI. Examples like predicting when a machine might fail.
Exactly. Or finding bottlenecks in a supply chain before they cause major delays.
Yeah.
Real-world business problems.
Makes sense. And then there's the buzzword of the moment, generative AI. How does C3.ai play there?
They have C3 Generative AI. It's a key offering, and they really emphasize its suitability for enterprise use.
What does that mean, enterprise use in this context? Security.
Security is a big one, yes.
Yeah.
Also, traceability, being able to see why the AI generated certain output, linking it back to the source data, that's crucial for businesses. And they stress it's LLM agnostic.
Meaning it can work with different large language models, like from OpenAI or Google.
Correct. It gives enterprises flexibility. They also have a U.S. patent related to agentic generative AI.
Agentic. Sounds fancy. What's that about?
Think of it as AI that doesn't just generate text or images, but can actually perform tasks, coordinate workflows, almost like a smart assistant acting on its own initiative based on goals.
Okay, so it could potentially automate more complex processes. Any examples?
Sure. Maybe helping a government agency handle citizen requests by automatically pulling data, drafting responses, and flagging follow-ups. Or in a factory, monitoring sensor data, diagnosing an issue, and scheduling the repair automatically.
Interesting. So platform tools, pre-built apps, and now this advanced generative AI seems like a comprehensive offering, but who are they up against? The competition must be intense.
Oh, absolutely. It's a crowded field. You've got direct competitors focused on data analytics and AI platforms. Palantir is the big one there, obviously.
We'll definitely come back to Palantir. Who else?
Then there are the hyperscalers, the big cloud providers. Microsoft Azure AI, AWS with its ML services, Google Cloud AI, and Vertex AI.
But wait, aren't they partners with C3.ai too?
Yes, exactly. It's that classic tech dynamic co-opetition. They partner. Often C3.ai runs on their clouds, but they also offer competing AI services.
Right. Okay, who else is in the mix?
You also have the large traditional enterprise software companies. Think IBM Watson, SAP, Oracle Salesforce with Einstein AI. They're all embedding AI into their huge existing suites.
So competition from established giants.
Definitely. And then there are other more focused AML platforms like Snowflake, Databricks, SaaS Via. Plus, companies always have the option of trying to build things themselves using open source tools.
That is a lot of competition. How does C3.ai argue they stand out? What's their unique selling proposition?
They usually point to the integrated nature of their platform, covering that whole AI lifecycle. They also stress the value of their ready-made, industry-specific applications, that turnkey aspect. And lately, their enterprise-grade generative AI, with its focus on security and traceability.
But realistically, against giants like Microsoft or Google, they're still quite small, right?
Yes.
Market share-wise.
Oh, significantly smaller. One comparison suggested their market share in a broad sense was tiny, like 0.03% or something. So perspective is important. They're a niche player in a massive growing market dominated by behemoths.
Okay, that context is crucial. Let's zoom in on that Palantir comparison now. You said they're a key competitor. How do they really stack up against each other?
It's a common comparison, but their focus isn't identical. Historically, Palantir has been more about the powerful data analytics platform itself, integrating and analyzing complex data. C3.ai, while having a platform, has perhaps leaned more heavily on selling those pre-built applications alongside its development environment.
So Palantir, more platform-centric, C3.ai, more application and platform.
Kind of, though Palantir is also pushing applications now with their AIP. But fundamentally, there's a difference in approach and maybe core strength origin. Another huge difference is profitability.
Right. Palantir is GAAP profitable now, isn't it?
Yes, they've achieved GAAP profitability, which is a major milestone. C3.ai has consistently shown losses on a GAAP basis.
That's a big deal for investors. What about growth rates and valuation?
Interestingly, their recent revenue growth rates haven't been wildly different. Both have been in that sort of 20–30% range recently. But the valuation the market gives them is worlds apart.
How so?
Palantir's price-to-sales multiple has been much, much higher. We're talking maybe 60–70x or even more sometimes in certain reports, compared to C3.ai, which has been trading at more like 6–8x price-to-sales based on some figures.
Wow. So Palantir gets a massive premium. Is C3.ai potentially the value play, albeit riskier?
You could frame it that way. C3.ai looks cheaper on that PS metric, but that lower multiple reflects the lack of profitability, the execution risk, maybe uncertainty about long-term contracts like Baker Hughes. Palantir's premium reflects its profitability, its strong government base, and maybe higher market confidence in its commercial expansion.
And their market positioning is different too, right? Palantir started strong in government.
Exactly. Strong government roots, now pushing hard into commercial. C3.ai had maybe a broader initial industry focus, less concentrated initially.
Any key tech differences? You mentioned C3's model-driven architecture. What's Palantir's equivalent?
Palantir's architecture really revolves around its ontology. It's like a dynamic digital twin of an organization, mapping data, processes, relationships. It's a different philosophical approach to organizing and interacting with data compared to C3's MDA, focus on abstracting the application building process.
Ontology versus model-driven architecture.
Okay.
And Palantir's cash flow.
Palantir has shown really strong financial health recently, generating significant cash flow, which obviously supports its valuation and growth investments. C3.ai is still in that cash burn phase.
Understood. So, laying all that out, the big question. Could C3.ai actually achieve growth similar to what Palantir has shown, especially that explosive U.S. commercial growth Palantir's been reporting?
Well, Palantir's U.S. commercial growth has been impressive, no doubt. For C3.ai to potentially replicate something like that, several things would need to go right.
Such as, what are the catalysts?
The overall enterprise AI market needs to keep booming, obviously. Their partnerships, especially the one with Microsoft, need to really pay off and drive significant sales. They need to gain more traction in the federal sector, big one. Adoption of their generative AI tools has to take off.
And converting those pilot projects they talk about?
Absolutely. Turning pilots into larger recurring revenue deals is crucial. And continuing to leverage that industry-specific application library. Those are the potential upsides.
Okay, but what about the hurdles, the risks that could stop that from happening?
The biggest one is probably achieving profitability. The ongoing losses and cash burn are a major concern for investors. Customer concentration, particularly the uncertainty around the future of the Baker-Hughes relationship, is another risk.
And the competition we talked about?
Intense competition, yes. And just general execution risk. Can they deliver on their strategy? Scale effectively, manage partnerships well, especially against much larger rivals. It's a tall order.
So the potential is there, tied to the massive AI market growth, but it's far from guaranteed. They need to prove they can turn growth into profit and execute flawlessly.
Pretty much. Palantir has already crossed that profitability threshold and has strong cash flow, giving it a more stable base to fund its growth. C3.ai needs to show it can get there. Their different models, platform versus apps, partner strategies, ontology versus MDA, also mean their growth paths might just look fundamentally different anyway.
Right. It's not necessarily an apples-to-apples growth trajectory comparison, even if they're competitors.
Precisely.
Okay, this has been incredibly helpful in understanding C3.ai's position. Let's try to quickly summarize the key takeaways for listeners maybe thinking about this stock.
Sure. So, key points. C3.ai is showing accelerating revenue growth, which is positive. They have two core offerings, the development platform and a large suite of pre-built industry applications, which actually drive most bookings currently.
And they're pushing hard into generative AI for the enterprise.
Yes, with a focus on security and traceability. But you absolutely have to understand the competitive landscape. It's fierce, with tech giants and specialists like Palantir.
And that Palantir comparison really highlights the trade-offs. C3.ai has a much lower valuation multiple.
But comes with significant risks. No GAAP profitability yet, cash burn, customer concentration issues, and major execution hurdles. Palantir offers profitability, but at a much higher price tag.
So opportunity balanced with considerable risk needs careful consideration.
Definitely. It hinges on their ability to execute, convert pilots, leverage partnerships, and ultimately find a clear path to sustainable profit.
Excellent summary. Well, that wraps up our deep dive on C3.ai for today. Huge thanks for walking us through that.
My pleasure.
And for everyone listening, if you found this analysis useful, please do subscribe to the StockExplorers podcast for more deep dives like this one.
Yeah, hit that subscribe button.
And maybe give this episode a like if you enjoyed it, and turn on notifications so you don't miss our next analysis. Thanks for tuning in.